The independent energy expert Cornelia Meyer. And Cornelia, so this word stagflation, are we overdoing it then?
I think we are overdoing it a little bit because, yes, we had some inflationary pressures, but the inflationary pressures is not just oil. It is also that the pound tumbled because of Brexit, in the wake of Brexit. So the economy has stuttered. Exports have done quite well because the pound went down. So the big worry is that if interest rates, as it looks, go up by 25 basis points this Thursday, because the Bank of England says so, then we negate all the positive of the increased exports.
Although I guess for Philip Hammond it's quite good because he gets increased oil revenues.
Well, he gets increased oil revenues, but the problem is, do the increased oil revenues really sort of balance what it will do to the exports of normal, manufactured goods?
So what's been behind this rally over the last year or so? Is it demand-led or is it supply-driven?
It's both. When you look at it, the demand side has come up, and the world economy is doing better than expected, as the IMF says. And demand, OPEC says this year 1.5 million barrels a day more. Next year 1.4 million barrels a day more. IEA says something similar. EIA says something similar. Also, all the big agencies say it's going up. That's one. And the other one is last year in December, you may remember that OPEC said they would take 1.5 million barrels, 1.2 million barrels out of circulation. And they had an agreement with 10 other countries, non-OPEC countries, to take another 600,000 barrels out of the market. So all in all, we have taken out of the market 1.8 million barrels with pretty stunning adherence.
That's quite a meaningful number, isn't it? In terms of overall daily consumption, that's what, roughly?
Well, that's roughly about 2% or so. But, as the markets were starting to rebalance, this is actually very good. And what was really interesting is that 2 weeks back, when President Trump said he would not renew the Iran nuclear agreement, and we worried about sanctions, and when the Iraqis went and took over Kirkuk, and we were worried about the pipeline from Kurdistan into Turkey, into Ceyhan, suddenly, for the first time in about 3-4 years, the geopolitical risk premium came up and oil shot up.
Now, what's all this going to mean for the US shale producers? Because they'd very much supplanted the Saudis as being the sort of swing producer globally, hadn't they?
Yes, and they're still doing well. The problem is how much more can the Permian give? But there are new things like Utica, which is more gas. And then there's Utah is now the new hot thing, so New Mexico, so there are other places. What's really interesting there is that there was used to be an entrepreneurial space with lots of small entrepreneurial companies with risk capital, but Chevron and Exxon have moved in there. These days, 1 out of 5 barrels that Exxon produces is actually shale oil. That's very interesting.
In terms of, we were talking just now about the geopolitical ramifications of higher oil. I mean, for oil importers, higher crude prices, it's a tax on growth. But are there other benefits for the world in terms of things like Russia? I mean, Russia's been in recession for the last couple of years. Putin did some pretty wacky things to take people's minds off it at home, didn't he? I mean, is it a positive?
For those countries, it's a real positive. It's a real positive for Russia. And, they only said they would take out of about 1 million barrels a day, 11 million barrels a day, they're taking out 300,000 barrels a day. So every incremental penny really goes right back into their pockets. For the Saudis, it's important because they have this, as they said last week, they have this grand vision on reinventing the country, and they need the money from increased oil production, and they need it also for the Aramco privatization.
All right, well, let's bring in Amrita Sen. She's chief oil analyst at Energy Aspects. Amrita, good to see you there. How high do you think the crude price can go from here?
I mean, look, fundamentals look very, very solid right now. I mean, Brent's at about 60. There's still a little bit of an inventory overhang to clear, but there's no reason why we shouldn't be getting into kind of 65 zone in the next couple of months. It won't be straight away, but we have drawn inventories at an unprecedented rate.
And in terms of OPEC, they're meeting next month in Vienna. Do you think they and the Russians are likely to extend their production cuts further into next year?
I think this poses an interesting question because, of course, if prices were lower, I think it would have been a more sanguine deal that, yes, they would meet in November and you could see them extending by, anywhere between 6 and 9 months. And that is what the indications were. But with prices at $60, I think there's a little bit of, they're getting a bit of cold feet that should prices continue to go towards 65 or higher. But let me be specific over here. WTI prices, and WTI is trading substantially lower than Brent right now, then they could see shale production from the US rise again, and that's their worry. Having said that, I will make this very, very clear that we don't think this cooperation is necessarily going to end. I think this is very much a long-term cooperation between OPEC and non-OPEC countries. However, whether they decide to extend the deal in November or not, given that prices have risen so much, still needs to be seen. Maybe they extend it in March. They have to meet again then.
All right, Amrita Sen in the office there, and Cornelia Meyer here. Good to see you both. Thank you.